Now, the top 1% look like they're loading up on these 4 stocks that I'm about to show you. In this video, we are going to see how we can swing trade these stocks or hold them for a long run, because not all the stocks are investable. Some are just like one night stands. You should only hold them for maybe 1 month, while others are suitable to be held over the long run. They are marriage material. Since your time is valuable, let's get into it. And of course, the first is already on your screen. It is Netflix. Netflix is showing something called a virtual contraction pattern. This is something I learned from Mark Minervini. And of course, what makes this stock very strong are its fundamentals. We can see the earnings per share growth, the revenue growth in this table. It's amazing. We want to see EPS with an average of 30% over the last 4 quarters, but we see something way above that. We want to see revenue of 15% over the last 4 quarters. Now, of course, this is just barely meeting the target. Return on equity, we want to see an average of 17%, but now we have 26%. And of course, just because the stock is great doesn't mean it's going to go up. The market has to be going up. Money has to be flowing into the system. And of course, I've already done that work for you, and I've realized that the market is at a time where it is good to buy. Another thing that I like about this Netflix stock is that it is going to all-time highs. Whenever a stock is at all-time highs, as you can see, because this last high was around here of $700, that was about 4 to 3 years ago. This is the weekly chart, by the way, and this is the daily chart. So whenever a stock crosses its all-time highs, that means that there are no angry investors waiting to sell the stock. So we can see while Netflix was climbing this, it was reaching all-time highs. And you can see that the climbing was smooth in the past, right? That is because it was at all-time highs. But now we can see that happening again. So what it has done is that it has contracted. We can see something like the cup and handle, then it has contracted again here. A good time to buy it was here around 694, but it's still not too late to buy it. Of course, it was a scary buy because there's a huge resistance here around $700 that has been, this is a multi-year resistance from 4 years ago. So we didn't know that the stock is going to break past that, but now it's looking like it's likely to break past that level. What we can do for such a stock is you take a risk, which is 1.5 of the average true range. So we can see it's 3.2% or $23. So you put it in here. Sometimes it's too wide, right? Don't be mechanical. The stop should be right below this candle. So we can see we should take a 2.7% risk. But our measurement tool is about 3.2%. So we can see our first target here is going to be, we want to see 3R, right? So our first target is going to be 3R. So here, around 9%. But of course, since we can take a tighter stop, so we can risk 2.7% to make 9.64%. The reason why this is not a very long-term hold in my eyes is because the stock looks like it's on its late basis. By late base, I mean that the stock has run up too much and it looks like the legs are starting to run out. So such stocks, you don't want to hold it over a long term because it's likely to collapse like it did here in the past. So what you saw here in the past is that NVIDIA had run up so much and it starts to crumble. It tries to push, but then it collapsed again. So after such a big collapse is when you can enter the stock again, unless the stock has created new products and the revenue is growing like crazy again, but I'm not saying that from Netflix. So this is more of a swing trade. And of course, if it does this, our target one in less than 15 bars, 3 weeks or less, then our next target is now target 2, right? Which is supposed to be 5R from, so we can see 16%. So this would be a very good risk to reward ratio. So if you're to risk $19, then you could make $114. This is a great trade. Before we move forward, I want to share with you a newsletter that we're running on this channel. So this newsletter will teach you how to trade and invest. We do all the research for you and save you over 20 hours of research per week. We give you precise entry and exit signals for stocks, and also included free lessons and simple lessons on how to trade and invest profitably. And we do this by focusing on the top 1% of stocks. Of course, this year we had a lot of great winners. Some of the best winners this year have been NVIDIA, which created 180%. As you can see in the chart, NVIDIA broke out around $50 at that time. You can see the labels on the chart, and these are the lessons that you would be learning from the newsletter. SMCI did something similar and actually returned 240%. Of course, there was a very big base. We teach you all of this in the newsletter. It broke out in around January, and then you could have made 230% return on your money. There is Appfolio. So here, this stock had two plays this year. There was a 60% play earlier in the year from Feb, and then recently there was also an alert in the newsletter where we told people to buy it around $88, and now it's already at $127 for a 50% gain. There is HIMS, which was an earnings play, and here we managed to get 90% in just 3 weeks. So of course, the alerts are not coming out every day, but every week you'll be getting alerts. If you want to sign up for this newsletter, go to my YouTube channel, click the link in the video description or on the channel, and then you'll be led to the Profit Punch report, sign up for the newsletter, and get all of this for free. Our next company is actually a restaurant. Who would have thought that restaurants are looking good? It is called Shack, right? Shaquille O'Neal. It's going to become as big as him. So here I've drawn for you a nice base. You can see that it is forming a virtual contraction pattern. And we can see that it has just jumped out of that handle. But now what we want to see that, is it going to jump over this resistance? I already took a small position, right? Because it got up on this day. And if it closes above this resistance, closes by 3%, then I know that, hey, this is a surefire play. So whenever you see such big bases, technically, this is a very good sign. Another reason why this is a good stock is that a lot of restaurants are actually breaking out right now. The one which broke out last week that I didn't buy was IT. So you can see that one actually broke out. Another one which is going really high is Cover Group. That one already broke out. I already took a position in this. The next one was Sweet Greens. So these are all stocks. Okay, Sweet Greens is not yet broken out, but we can see it is forming a very similar pattern, right? What you want to do is find stocks in a particular sector, and this is a restaurant sector, and you can see that all the stocks in this restaurant sector look like they're about to jump out. Some have already jumped out, which is a clue that we should get into those that are about to jump out. But after that, let's look at fundamentals, because I use both technical analysis and fundamental analysis. So of course, not all the fundamentals, but they just like to see some pointers. The first pointer is the return on equity. How is it looking? We want to see a return of equity of about 17%, but we are seeing only 4%. That is not good. EPS, we want to see an average of 30% of the last 4 quarters, but we are seeing way over that, which is good. But not only that, you want to see earnings per share growth that is growing, accelerating. This one looks like it is decelerating, right? It was 681, 475, then it goes down, then 232. So it is decelerating, which is not a very good sign, because whenever this growth stock, when their earnings start to decelerate, that means that they're not as profitable or going to be going up anymore. That's a very bad sign. But technically, we can see a big basis forming, and once the stocks jump out of such big bases, we can only expect good things to happen, because you can see what happened the last time the stock jumped out of a big base. It did about 40%. So once it formed this base, we could have gotten here for about 56%. So we are seeing something very similar here. And of course, the last thing that I like about this stock is that it's very close to its all-time highs. So this line here is likely to be a resistance, right? So you see the all-time high line from here, $138. So this is a huge resistance, right? All-time high resistance that the stock could collapse. But as it is on its way there, we can still trade it and enjoy it. If it passes through that, then it's likely to go to Valhalla. It's likely to go up crazy, and you can make crazy profits on such stocks. So you take a very small position. Risk on this one is about 6%, right? So what you can do is just take a smaller portion of your account. So we want to see 1.5 average true range. This is our measuring rod. We get 5.12, okay, around there. So our first target is 3 hour. So let's see, 3 hour. Okay, that's 15%. Within $1,000, your first target is about 15%, and the next target is 5 hour, which is actually, interestingly, very close to the all-time high resistance. So I like it because both the targets are below the all-time high resistance. So you get in here, if it gets to this 1 hour in less than 2 to 3 weeks, then you can sell a third of your position, and then you can sell the rest at target 2, because once it reaches this all-time high, it's likely to fail there, because we see what resistance does to stocks. So you can see that forms a resistance here, comes down, fails to clear the resistance, comes down, but then we can see that once it's coming down, it's not falling down as much as it was. It is contracting. This is a VCP pattern which Mark Minervini discovered. So once it contracts like this, and it finally jumps out of the last contraction, this is a very good stock to jump in. So I hope you've seen how to handle that trade. Our next stock is actually a pet insurance stock. I don't know a lot about this stock, but I can see the technicals are looking really beautiful. And that stock is Trump. So we can see it is like Shark, but Shark already jumped out of this big base. Shark hadn't jumped out of its base. Trap has jumped out of its base. So it jumped out of base. So the black line is a 50-day moving average. The blue line is a 20-day moving average. When stocks come and bounce on the 50-day moving average and they form the base of at least 4 weeks. So we can see here, this is the weekly chart. We can count at least 4 bars. That is a very good sign. So now we can look to profit from here. What I like about this one is that we can make a very tight stop. So what we are looking for is for the stock to just jump right above the high of this particular day. So once it crosses above this high of this last close, then we can bring in our risk to reward ratio. So I already calculated for you the goals. This goal 24% is 3 hour of 1.5 ATR. So let's say if we get in here and we put 7.86%, you can see our first 3 hour goal is here, right? But since this is normally our measuring rod, doesn't mean we have to take this whole risk. We can have a tighter stop, have a stop here around $2.2. So that means that if we reach our first goal, we're making 4.72 times our money, whatever we're risking. So if you risk $100, you get $472 back. And if it does this in less than 2 to 3 weeks, then you know what to do. You can sell a third of your stake, and then you can now look for the next goal, which is normally 5 hour, which is this, around 40%. Looks really high, but this stock has done it before. So let's see, from here, the stock once it jumped out here, you can see in this kind of like mini consolidation, we can see that it definitely did move 40%. It moved about 50, 60%. So 60% moves are not new to the stock. It comes back on a 50-day moving average. We could buy it here again. It probably did around 39%. So this stock is used to this 40% moves. It's not an outrageous goal. So we can keep a very tight stop, and from here we can make 7 times our money back if it does reach that goal. So this is the second stock, and I hope it can move. We just have to wait and see. And our last stock is a backing stock, which is just not handling money. It's actually revolutionizing how we use our money, and that stock is TBBK. Now, TBBK, we can see it is at all-time highs, but I don't like this all-time high because you want to see a stock that's moving smoothly. This stock is looking a little bit very like volatile all over the place. That's why this is a stock that you're not trying to look for to hold for a long time, because it's not moving up smoothly. It's not like NVIDIA. When you look at NVIDIA or these really good stocks, you can see the movement is very smooth, but this TBBK, the movement is not smooth, but does not mean that the technical analysis that is showing is not beautiful. The technical analysis is showing is beautiful, and I think that it is ready to jump up. So what we can see here is, you can see a red day, green day, that is, the low is higher. The low of this green day is higher than the low. It fails to clear the low. The first day to enter was actually here on 3rd October, but I don't think we are late for this move. So what we can do is, I've already showed you how to calculate this goal. So the first goal is 16%. So we can see there, of course, we keep a tight stop. We're not using, this is our measuring stick, 1.5 average true ranges. So the first goal is 3 times of that. And that's how I got this goal 1. And once it reaches there, then we can, if it does reach there, if it takes a long time to reach there, just sell your whole stash. But if it takes a very short time and it's running there, like if you see a movement like this and it hits your 3 hours around here and it hits it very quickly, then you want to keep holding it. So you want to get the meat of this big move. But if you see it struggling, it did here and it did your 3 hour, then you're like, hey, get me out of this thing. So that's what we are trained to watch here. It's not, stocks don't move in a very beautiful way like we see in the textbooks the whole time, because hindsight is 20/20. There's always something new that happens. If you like this video and you're finding value from it, please like the video so that the algorithm can push it to other traders. And of course, subscribe to the channel for more videos like this. Thank you, and may the markets be with you.